Welcome to Otraves 1031 LLC. My name's Bill McCoy, and I've been helping real estate investors for 45 years. Otraves 1031 LLC acts as a qualified intermediary. Please follow our video series for additional information. No, we don't give tax advice. No, we don't give legal advice, but we can help you understand the process of a 1031 exchange. Thank you for watching. Welcome back, Otraves 1031. Today I want to define a term that is thrown about in the tax-deferred exchange world called boot. Here's a simple definition. Always remember it as your first step. Receipt of boot in a 1031 exchange is taxable. There are basically two types of boot. There is cash boot, money you keep out of your disposed property's escrow. And there is mortgage boot. That is when you exchange for a property with less debt than your existing property. So back up to try and keep this in relatively plain English. To fully benefit from a 1031 tax-deferred exchange, the taxpayer needs to follow two basic rules. Rule number one, even or up in value when you compare your replacement property to your disposition property. And rule number two, don't keep out any cash. If you violate one of those rules, it's going to create boot and taxability. There are a number of fairly complicated rules about the netting of boot. But if you have a $500,000 mortgage on the property you dispose of, the property you acquire must have a $500,000 mortgage, or you must inject $500,000 cash in lieu of that mortgage in order to avoid mortgage boot. It is possible to do a partial exchange. Many of our clients do that, and they need $10,000 for personal purposes after the sale of their disposition property. That does not destroy the exchange, but it does create a tax liability to the extent they keep that cash out. So a little bit of advanced planning will allow you to understand when you can take cash boot and what the income tax ramifications are with that. This is not all or nothing. Instead, if you're trying to avoid taxes, you're trying to avoid boot. But again, nothing wrong with paying taxes unless there's a legal alternative. So please give us a call. We'd love to talk about the possibilities of helping you with a 1031 tax-deferred exchange.